Hi everyone, so as usual I'm previewing what to look out for in the week ahead. And so a big question that everybody has been asking ever since the pandemic struck was, well, which companies can actually do well in this environment? And so the stock market's already recovered pretty significantly from those lows in March, but two companies particularly stand out and give us two strong answers to that question. They both have earnings this week, hence we're going to have a little bit more of a deep dive on them. That's Amazon and Netflix. Now, if I can just show you this chart very quickly, you can see the S&P 500, and we can say that's representing the top 500 shares in America. That's down 13% this year. Now have a look at Amazon and Netflix. Those shares have both gained near on 30%. So clearly quite a strong outperformance from those shares. We'll look at those in a bit more detail in a minute. First, I'm going to have a look at the economic calendar and the other big events to look out for this week. And if I might, please, if you do enjoy this video and think others might benefit, please hit that like button. It helps a lot. Now, on the economic calendar front, something to look out for first, I think, is those crude oil inventories. That happens on Wednesday, so a bit of a dearth of activity up until Wednesday. The story in the crude oil market is that supply is massively overhanging demand, and so we're looking at these inventories numbers to see if we're getting to the point where actually storage might run out in America. And if we start getting close to that point, we're probably going to have to start expecting OPEC or some other big producers to do more than the 10 million barrel cut they did the other week. And so big numbers here in these oil stocks. We can expect to pressure oil prices, which are already down at, they tested 18-year lows last week. We've got the PMIs data from Europe, so from the UK, France, and Germany. They're all expected to look pretty bad. So these are for April, and so actually, depending on the country you're looking at, sentiment did actually slightly pick up towards the end of April, as there was a bit of optimism that these lockdown policies might actually work and cure the virus. So in some places, there's an uptick here. We've got to watch that. And a very interesting one will be on Friday when we get these durable goods orders. We're looking at a collapse there from 1.2% growth to a minus 13% month, which is quite shocking. That's because orders for new aeroplanes have fallen off a cliff because obviously all the travel companies and the airlines are no longer making these orders. In fact, they're cancelling orders en masse because of the hit to the tourism industry. So in terms of timing of these earnings, we've got Netflix is after the close on Tuesday, and then we've got Amazon is on Thursday. So let's start with Netflix. Now, I think we can probably all appreciate the logic here. We've been given stay-home orders from the government. What do we do now that we have all this extra time at home? We can't go out to the cinema, to the museum, wherever you might normally go, the cafes, the restaurants, the bars. Clearly, you're going to spend probably a bit more time watching television. You're going to be watching more TV shows. And if the usual place that you find your TV shows is not proving enough, maybe you're going to look to somewhere else. Probably that somewhere else, in many cases, will be Netflix. And so Netflix already was a disruptor in the television space. We all know that the number of subscriptions is what everyone watches, is what investors watch. Subscriptions for Netflix are going up over time as people transition away from old television and cable boxes and the like to online streaming. That pattern has obviously accelerated during the pandemic, and we do have some anecdotal evidence that app downloads is a metric that some people have been following, have increased a lot. And so even Credit Suisse did some research and said that in Spain and Italy, the numbers went up 500 and 100% respectively. So big jumps in downloads. You can only assume that that's translating to more subscribers. And so what Netflix were expecting was a 17% increase in subscribers when they made a forecast in Q4. One can only assume that number is substantially higher than as they forecast before. Likewise with Amazon, the investing case pretty clear in hindsight. High streets are completely deserted, as are shopping centres, shopping malls if you're in America. These things are empty because they've been forced to be so by the government because of these social distancing rules. And so this was already becoming the case anyway, but now especially so, Amazon is almost the only game in town. People are ordering their items online instead of going to the physical brick and mortar stores. Now, all those stores that have a good online presence, they will outperform the rest, and that's been a trend for a while. But clearly, Amazon's going to be a beneficiary here, and we can already see from the notices that they've had to hire out a lot more staff to cope with the demand, that there is, in fact, more demand to justify that more staff. In fact, that's probably the only risk factor to these earnings, is that both for Netflix and for Amazon, maybe the increase in demand has brought about some extra costs. Perhaps server costs are a little bit more expensive than they might otherwise been had they been more gradual. And so that jump in costs might come alongside the jump in revenues. But ultimately, people aren't really following the costs and the profits of these companies. They're following the growth. These are growth companies, and so it looks like growth is accelerating. The only bigger risk, if you can say, to both these share outlooks, I would say, is that for any share to keep going higher, really what you need is a stock market that's going higher. And so we've had a big rebound off those March lows. If the stock market does roll over, one would imagine there's going to be some profit taking in these shares, and they could end up being some of the worst hit. Okay, that's it for this week. Thank you very much for watching the video. And if you did enjoy it, again, click that like button and subscribe, and you'll be able to see the same video when we release it next week.